All right, hello everyone, and welcome to this very timely, hopefully, webcast on precision bottom fishing for explosive profits. Delighted that everyone took time out of their busy schedules to be here, and this webcast is sure to not disappoint if you're interested in the subject of nailing market bottoms with precision. So let's get right into it. Hopefully you can hear us loud and clear. It looks like you can, so let's proceed right ahead. All right, so listen, the first thing that we've got to understand and kind of get behind us is, get away from the fear. We've got to learn to not be fearful of market corrections, much like the one we're in the throes of right now, because if we have a precise system, market bottoms are eventually going to create some explosive profit potential, and really already have done several times throughout even this calendar year, believe it or not. So even in the throes of some really bad market corrections, there's going to be opportunity for explosive profits. That's really the main emphasis we want to drive home early on in this webcast. So we're going to be showing you exactly how this is done. Okay. In order to make this a reality, this is potentially the hardest part. It's going to require some paradigm shifts. One massive paradigm shift, which really encompasses three shifts that you're going to have to make to get this right. So what we mean, of course, when we say paradigm shift, I don't know if anybody's ever had any Covey training. That's certainly a place where paradigm shift is a central theme. But really what paradigm shift means is a new way of thinking. And so what we're going to get away from is sort of our old habits, our tried and true habits of buying safe, undervalued stocks rising in price in rising markets, which is a recipe for splendid success, vast majority of the time. And we're going to learn what we need to do to get bottom fishing right so that we can make double to triple digit gains in just days to weeks, not years, as you would with those safe, undervalued stocks. Okay, so my promise to you guys is if you stick around here for the next 45 minutes or so at this stage, you're going to learn how to acquire the skills necessary to nail market bottoms with precision so that you'll never miss another explosive bottom fishing opportunity ever again. All right, so my name is Steve Chappell. I'm the Director of Trading Systems Development here at VectorVest. Been with the company now more than 20 years, and it's been quite a journey. And I've had the opportunity to see and participate in more than 30 market bottoms myself at this point, and so certainly have the expertise to pass along. I am just a small piece of a very highly skilled and wonderful collection of individuals who really take pride in delivering the best stock market guidance anyone can get anywhere and any price. And so, really take pride in our education. On our journey today, let's get to brass tacks here. First thing, we're going to learn a system that I use to make precise market entries at market bottoms. Of course, everything I learned has always emanated from our founder, Dr. Bart DeLito. He taught me everything there is to know about bottom fishing more than 2 decades ago, and been doing the same thing ever since. We're going to learn the key attributes to pick the very best stocks at the right time. They're not going to be your household names like Apple, Google, Facebook. It's going to be the right stocks to get the explosive gains. And we're going to learn the trading tactics that inevitably are going to help make you even more money. Okay, so what's the hardest part? Just to kind of cut the ice here, what's the hardest part in nailing market bottoms for you guys? This year probably sets us up for some decent discussions around this. So what's the hardest part on nailing market bottoms for you guys? I'll give you a minute or two just to type, 30 seconds or so, just to type a few things in, and then we'll share with the group. Yeah, so seeing a lot of course, I've done this webcast many times and seeing a lot of very familiar things littering the chat box right here. The most important ingredient, of course, is the most troubling, and that's the timing. Getting the timing right, knowing when a market bottom is actually the bottom. And there's a bit of an art to that. We have some proven market timing indicators that are going to significantly help us get the job done, and then there's some other things to talk about, and perhaps the missing element in this most recent attempt to get up off the lows is really a catalyst, an economic catalyst to help continue to drive prices up and out of these lows. And that could be a number of different things. some kind of closure to the Ukraine situation, and inflation, whatever the case may be. But there's just an awful lot of lingering concern out there, and that's really kind of stymied the market here at this most recent low. So for the time being, that catalyst is not in place, But we're going to talk about the fact as to why you'd even be looking for market bottoms at the levels that we're at, some market bottoms that we've seen this year and also from years past, to indicate just how awesome bottom fishing really can be. Okay, so let's get to it. And let's dig a little bit deeper. There's always more room to travel here, but let's dig a little bit deeper into the whole paradigm shift concept. So when we talk about making the transition, what we're talking about again is making the transition away from tried and true staple stocks that can still produce explosive gains, but not the kinds of explosive gains that we're really after. These are the kind of stocks, the mainstays, if you will, that you want to have in your portfolio for years to come. Your Nvidias, your Googles of the world, who just have the propensity to make more money quarter after quarter after quarter, year after year after year, and are usually best of breed in their field at doing that. But what we're going to transition to is stocks that truly have explosive upside potential, and what those stocks are going to be, as this graphic would indicate, you're going to, as Warren Buffett has said time and time again, buy when blood is in the streets. What we're going to be doing is showing you a quick way to isolate the stocks that have been beaten up the most, that still have some value to them, that can shoot up the page a lot more quickly than, say, the Nvidias of the world. Because when you look at this graphic here, this stock, in the matter of about a year, went up 4,000%. So there's clocking in reasonable percentages with good, safe, undervalued stocks rising in price, and methodically doing so. And then there's opportunities of a lifetime where you can jump into some stocks that can really get screaming. And even if we just own this little guy for 5 or 6 short weeks, could have more than doubled your money. And so let's get into it. When we talked about timing earlier, yep, timing truly is everything, because just by nature of that graphic, if we don't get timing right, what do you think is likely going to happen to these stocks that are shooting down the page? Well, yeah, if your timing is too early or your timing is off, you're still going to be in the throes of that horrific decline before these stocks do bottom and take off. And so timing is the most important element in this whole process. And so we've got to get timing right. In fact, we can do everything else wrong, and if we get the timing right, we're going to be okay. We're going to be just fine. We may not get as much percent return as some of our other constituents who did everything absolutely right, but if we get the timing right, it sets us up for success. So the traditional approach, it can be a struggle. So what many people out there do is they apply just ordinary technical indicators like a stochastics or an RSI, something that looks for extremely oversold conditions. They might even massage the look back period to custom fit it to something like a Nasdaq composite or one of the major indices to see that it's worked pretty well in timing things in the past, and then try to apply that going forward in the future. And of course, you know what the trouble is. Every once in a while, you're going to get one of these head fakes here, and more often than not, it can be pretty painful. So here was a kind of a classic setup with something like a stochastics where it just never got cooking. And so the result obviously is a bad entry. Then sort of the emotions take over, the whole I can't be wrong, it'll come back, and you know the story there. So the main piece as to why many folks struggle in this arena is timing. Timing is everything. And so even though in this last little attempt at a rally just about a week or so ago at this point, even though we didn't make any profit, we made 1.5%, which I hate to report that, but the market just didn't go anywhere. We got the timing right, that set us up for success, but the market just didn't blast off because we were lacking that catalyst, right? But the main thing is, as long as you know how to pinpoint market pivots that have the propensity to turn into these tremendous market bottoms, everything typically falls in place. And so the problem here, though, is most people have an incomplete system. And so we're going to be detailing more about this whole, what are you talking about from last week? What are you talking about 3 opportunities that you did make money this year already? And more than 18% on one of those turns, okay, and more than 33% so far this year in bottom fishing. And so I'll repeat that again, more than 33% this year through live trading, through a brokerage, documented, results, 33% this year alone. If you go back to prior years where you have major bottoms, the numbers go way up, okay? So we're going to talk about how to get it fixed so that you can do that. We're going to talk about how you can do the kinds of performances that we just talked about. So the system is ultimately going to determine your success. And if you don't have a system, lots of ruck, raggy, it's going to be a very difficult game. And so our system, fortunately, is really simple. It's as easy as 1, 2, 3, and we're just going to kind of draw it out. And by the way, guys, I am riding solo here, so I've got nobody in the background answering questions. So I will try to take as many questions as I can at the end today, okay? But just kind of patiently ride along with me here today, because believe me when I say I've been doing this same presentation for 20 years, the same way that I'm going to do it today, really, and so, you're in good hands. All right, so what we're going to need to address is when to buy. We're going to need to address then what to buy and when to sell. So it's going to be a 3-prong attack. And when we talk about when to buy, what we're really talking about is precise entries. Then we want to identify the stocks that are really ripe for those double or triple digit gains in just days to weeks, not years. And then what we want to do is have a sensible stop loss that's going to allow our winners to run and keep on running if they will, but at the same time cut them relatively quickly. We're going to talk about some of the percentages around that, but still give them room, because these are going to be volatile assets. So you can't run right out there with a 5% trailing stop loss. You're just going to continuously sell stocks and never get anywhere. Okay, so let's get to it. Let's build it up. Let's talk about timing. We're going to really kind of just focus brick by brick. There's 3 bricks. First brick, market timing. First cornerstone of that pyramid, okay, is market timing. All right, so what we're going to be talking about is getting in the day the market blasts off. Now, there is sort of a sweet spot of within a few days of a market bottom, you're still okay. But the longer you wait, the more and more of the returns really quickly evaporate, and what potential returns. I don't know how many people know this, but when markets take off from a low, a lot of the movement is real early on. When we talk about double to triple digit gains in days to weeks, we're talking about getting in quick, because that's where the money is. So what we mean is getting in the day the market blasts off, all the way up to maybe a primary wave up with confirmation the following day being the latest, which is typically within a couple of days of a bottom, okay? And so we're going to talk about how we do this, but here's an example of nailing a market bottom with the Nasdaq. And of course, this is back off the COVID collapse. And we did do this for our customers, documented in real time, okay? So that's not just some kind of fabricated circle placed on a nice looking graph to make everything look good. These are actual occurrences that we're talking about here, okay? Now the frustration, of course, sometimes we're way too early, markets inevitably go lower, sometimes we're too late, and most of the good movement is gone. So, I mean, if you just look at this chart, if we waited for markets to recover enough to where we're actually going higher again, look at the green bars left of that pink arrow, and then look at the green bars right of that pink arrow. Which of them are taller? Right? So, congratulations if you wait till you make a uptrend on a composite before you get in, all of the easy money is gone, all of it, okay? And so what we're talking about again is getting back in there on that first big tall green candle, and we've got a recipe to get that done. So we're going to be talking about how to get there. So the missing piece, we need the precise indicators to nail that first big tall green candle. the blast off is coming. Here are some recent examples, even up into this year. But this is, of course, you see that blast off day back in March of 2020. Boy, there was a lot of money on the table there. But you might be surprised at how well you could have done even November of 2020 up until February, when the wheels came off the growth stocks in the stock market and have never really come back, right? And then that far green arrow on the right hand side of the screen, that's March of this year. And that's where we made 18% in just 3 days. In just 3 market days, the wheels came off the rally pretty quickly, okay? But there was money to be made there. We actually also participated in the prior 2, and in aggregate, that's where you're up more than 30% already this year, okay? So we're going to talk about it. And when we get the timing right, yep, good stocks like Apple, they're going to take off too. They really are. Okay. This was back in one of the market bottoms, coming off a very, very ugly market decline early in 2018. And had you gotten in around the time we did, that arrow is actually drawn to scale on Apple, and that's relative the price that you would have received on Apple on that market bottom back in 2018. So we like to show a lot of examples as we go through here so that you see this can be done time and time and time again. On average, you get more than 2 market bottoms per year at this stage, more than 2 per year. Some are buying opportunities of a lifetime, like March of 2009, March of 2020, March of 2003, off of the dot-com bubble collapse. But you get at least 2 really attractive market bottoms a year, and you can kick back double to triple digit gains on any of these, okay? More so the double. The triples really come on the back of those huge market bottoms, right? But anyway, let's get back to it here. But I want to make that clear, because if all you do is listen to CNBC, they're going to be talking about V-shaped recoveries and all of these things in terms of market bottoms and things. Look, there's all kinds of explosive market moves, even when you're not in a V-shaped recovery, okay? Even when you're in a bear market. For example, if you think, many of you probably can't think of the stock market in your mind as well as I can, but if the first thing that comes to my mind after I said that was, I don't run anything scripted, okay? So I'm just here talking to you like you're my buddy. But back in 2008, in the throes of the financial crisis, right, there was actually a run from late March up until early June of that year, even in one of the most horrific, certainly 9 months or so of market action that we've seen in recent memory. And so there are always opportunities, even in the worst of financial market situations. There's always going to be explosive opportunities out there. But what we've got to do is make the shift. And so what I want to do is just kind of take you over into VectorVest here really quick and highlight some of that for you so that you can see what we're talking about. So I'm actually in the product now, and that's great because I hate slides. I like to just get in the product and show it, And so what I'm going to do is go to what we call a market timing graph, okay? And in here, I've got people in this room, probably not even VectorVest subscribers, guys. So we're going to be covering things all the way from ground zero, okay? So this is a depiction of the stock market for the last year. And the one thing that should jump off at you off the page right away is that, if that's the case, the markets are down, and down considerably at this point, over the last year, right? Now, you should actually be getting excited about that more than frustrated and all these other types of emotions, because that is, in fact, what is going to create the opportunity here in the future. And so what do we mean by that? Well, we have all of this data, that we can look at and we can analyze. And if we go towards any market low here, one of the things that we're going to see, let's just go right to a low just to drive the points home first. and then we'll talk about them. When this market hit an ultimate low, okay, this is back in 2016. This is when energy stocks last made a good run. Was back off of this February 2016 low. The energy stocks started soaring from there before they went through another 4 years or so of just putrid performance. But anyway, back on subject, Steve. The market comes down here and hits a low, and if I come over here to the right, we have some key market timing indicators that help us know when it's time to be looking or searching for a market bottom. And so those two key indicators are right here on the right side of the screen. The one says MTI for market timing indicator, and the other one says buy-sell ratio. The market timing indicator is cast on a 0 to 2 scale, and when it comes in below 0.6, we are searching for a juicy market bottom at that point. Okay. The buy to sell ratio, when it goes below 0.2, we are searching for a bottom period. So the one indicator that you must have at all times to be searching for a market bottom is the buy to sell ratio below 0.2. Okay. It's nice to have the MTI below 0.6. And the lower these numbers go, the better. It's like stretching a rubber band. So it's not to say, oh boy, the buy to sell ratio is below 0.2, let's go ahead and buy stocks. No. You don't even do that with the stochastics, right? I mean, if you use stochastics the way George Lane created it anyway, of course there's multiple ways to do that. But when we're talking about extremes, you need to see K bounce back, right? So we're going to be looking for the market to make an explosive move, right? And so there's many different things that we can teach you in that regard. We're not going to have time to teach in infinitum in this kind of a venue in this quick of a time frame. There's candlestick pattern to learn. There's catalyst information to learn. There's percentages of movement in the pre-market as thresholds to learn. There's lots to learn here, okay? But basically, we're looking for what we term the blast off day. So here on 212, that is blast off day, okay? So you have major change in market sentiment from close to open that carried all throughout the next day into a very strong close. And so there's more to learn, as we said, and we're going to get to more as we keep going. There were different alarm bells going off in VectorVest, like bottom fishing searches or exploding in price, up 10% or more at the market open or very close to the market open, and different indications like that. Okay, but the major change in sentiment from close to open is really what we're looking for there. Okay. And then we want to see that persist throughout about the first half hour or so on many occasions, or there's just some days where you can just see the market is exploding so strongly you just can't do anything but want to jump on board. But let's just kind of look at this really quickly and not get too mired down into the detail because we don't need to at this point. Anytime I go to a low, if I come over here to the right and look at the levels, let me go to a date line so that we keep the numbers here. This is back in 2009, and March the 10th was the day the market took off, actually. Buy to sell ratio is still well below 0.2, right? It's at 0.10. MTI is well below 0.6. And so we knew that that was likely going to be a major market bottom, okay? As we come over here to the right and we go to this low, yep, buy to sell ratio is below 0.2, MTI is below 0.6, another good opportunity. If you don't believe me, we'll jump in here, and if I told you we could have made we did make 18% just in 3 days this year. Imagine what a market just like this over the course of a couple of weeks could do. All right? That was a major opportunity. This one didn't pull back enough to qualify. Okay, Okay, so you're still really part of a campaign there, or could be anyway. This one here, however, pulled back enough to where the buy to sell ratio is below 0.2, MTI is even below 0.6. Remember, MTI is not a requirement, it's just really nice to have. How about this one? Okay, let me go back just a couple of days here. Buy to sell ratio below 0.2, yep. MTI not quite, but again, another good opportunity, yeah? Let's go to the next one. Oops. So now we're into 2020. But you get the idea. Here was one in 2019 that we haven't talked about yet. And we showed about a half a dozen more that we hadn't talked about yet either, right? And so even this year, even in the throes of this year, some of you might say, well, this didn't turn out to be a major market bottom. No, it didn't. But we're up about 9% on this campaign before this red day came in, and we walked away with 3. Okay, we got in here, we made about 6% on that one, and we got in here and we made 18% on that one. So in each of these cases, buy to sell ratio below 0.2, yep. MTI below 0.6, yep. Okay. Buy to sell ratio at the low during the day, maybe it was, below 0.2 there, because it opened excessively lower. Okay, and if we look at this one, buy to sell ratio, I think the day before was below 0.2, or maybe it was back here. Must have been intraday as well. But anyhow, all of this really a function of a market that is dramatically oversold and created opportunity. Okay. And where do we find ourselves now? We actually bought into this one here on this day at literally 9:34 a.m. and we were up about 10% the first day. And then just a couple of days later, the bottom fishers just didn't kick into gear this time, so we bailed. And what we think is there's going to be an even better opportunity right here around the corner. So I think you're in the right place at the right time. Because if we sink lower and get down to our next level of support here at some point in the future, if there was pretty good opportunity on those 3 little minor campaigns and a missed opportunity here, what do you think an opportunity where the VVC pulls back another 10%, where the markets pull back another 10% might create, right? What happens if they pull back another, I don't know, what is that? Yeah, another 20% from there. What kind of opportunity would that create, right? And so here's the good news. We've got the recipe on getting our shopping list ready and getting ready to see that explosive day. When that explosive day comes, we can very clearly detail for you what that looks like. That's the day that you want to jump on board, and that's the day where you can really reap the benefit, okay? So we'll get more into this as we get a little bit deeper into the webcast. Okay, let me go back to the PowerPoint here for a moment. Okay, but as you can see, we have our own very tried and true way of doing this. We've identified and nailed more than 35 market bottoms in the last 2 decades alone, okay? Some, of course, much better than others. And the other thing I would say is there is going to be times where, just like now, the market may end up going to a lower low. That does happen. Even if we go back here to even 2009, oops, if I can get back there far enough. Keep on sliding, baby. There was actually 2 opportunities here back in 2009. We always talk about the, oops, stop drawing lines, Steve-O. We always talk about the big one, which was March 10th. There was actually another opportunity here, and sometimes the market will end up going to a lower low, right? But that's 2 opportunities now, and eventually the big one takes hold, right? And so we'll be hopeful that the big one is not as far away as many people fear. You just never know, All right, let's get back over and take a look at the next step, because the next step is really interesting for a lot of folks. I think this might be the most interesting part of the webcast, because what we're going to be talking about are the right stocks to buy under these conditions, which again is not, Taiwan Semiconductor or AMD or Enphase or Microsoft or Google or any of these sort of household names, at this point. Because if we want, in simple terms, stocks that can produce double to triple digit gains in days to weeks, not years, then we're going to have to get away from that approach. We're going to have to get away from what is traditionally good market advice, which is to only buy stocks where if the market shut down for a decade, you'd be perfectly happy. What we want to do is get away from good stocks that can produce just ordinary market returns. So let's just say we took a portion of our capital, say $20,000, and invested it at the perfect time on February 12th, 2016. I actually showed that on the market timing graph when we were in there. Remember, that's the one I said that was the last time energy also made a very prolific run in recent memory here. And so, as you might have just guessed, well, I don't see very many energy stocks in this list either. What I see are Amazon, Facebook, Home Depot, Disney, Visa, Google, Walgreens, Apple, and Gilead Sciences. What I see are some really terrific stocks. In fact, some of the very best stocks even to this day in the stock market. Well, maybe a couple of question marks to this day. But at that point in time, they would have been some of the very best. Certainly, right? And so as I look at the bottom there, if I look at the average row, 9% in 3 months, that's pretty good. That's about 40% annualized rates of return, not too shabby. The S&P, however, is outpacing you. So if you just would have bought the S&P, I love those guys. All they say is what you do is you just buy a little bit of the S&P every month. Even if the market's good, even if you're in a bear market, you just keep buying. It's crazy. We need to do better than this. Okay, we're going to show you what is actually the right way to go here, and that is, we don't want to feel like this guy. We don't want to buy great stocks and watch the market beat our performance. What we want to do is find the big winners, and so we've got searches that are going to enable you to do that. In fact, we've got a whole folder of searches. If I go over there now, back into VectorVest, we'll show you some of this. Okay, so if I first go to the market, we'll go to a fun one first. We might do another less prolific one here in a minute, okay? But I want to go to a daily graph because we want to nail it to the blast off day. This is the blast off day. I hope we can all agree. This is the first day, by the way. Just as a quick example, you see this red candle and then that green one? Did that green one overtake the prior day? No. Did this green one overtake the prior day? No. Did this green one overtake the prior day? No. Did this one? Yep. And it did so early that day. That's your blast off day. Okay? That's your blast off day. So March the 24th, 2020. Hope we can all agree on that. All right, March the 24th, 2020. If I come over here into Unisearch, so this is a scanning or searching part of the VectorVest tool, and in here we have a calendar of bottom fishing searches, or a category. That's what I meant to say there. Sorry, it's getting late in the day for me. Let's start with just blue chips. So if I get in here and run blue chips, so we'll go blue chip bargains, VST divided by RT, and we'll go back. This is where you can go back and see what performances could have been like for you. Not that you're going to get these exact returns, but what was possible. Realizing you're probably, particularly the first several times you try to give this a go, only going to get maybe half if you're really lucky. But let's see. So this is March. We need to go to the 24th, right? All right, so let's take this back because we're not going to hold them all the way to now. Generally speaking, the sweet spot is up to what we call a confirmed up call. That's where most of the money is made off of bottom. And so that's the first several weeks is really where the explosive parts of the gains are. Okay, these stocks can keep coasting, there's no doubt. But the explosive part is the early part. So we'll just run it up through May the 18th. All right, so here's the deal with blue chips. You know, blue chips are generally going to give you market returns. We've already covered that ground, but I'm going to show it to you again here. You know, so if we would have bought DR Horton and Skyworks and PNC and Bank and all this stuff, right? 20%. S&P did the same. Okay, so we've got some high caliber. We've got some high caliber searches in VectorVest designed to beat the pants off the market. But if you want to go blue chips, basically what you're doing is buying some of the bloodiest blue chips that are out there with those blue chip searches. Okay, what we're going to do, which really in most cases doesn't get you all that better than with just buying your Googles and your Amazons and your Facebooks of the world. I'm not sure Facebook should be still put in that list, but you get the point. Here's one of our favorites. It's called Bleyer's Bottom Beaters. Okay, we'll run this one. And now you did 96%. That's over the same time frame. From March 24th, 2020, just to May 18th. Did we get double to triple digit gains in days to weeks, not years? You better believe it. And so if you want to know why, well, there's a variety of reasons that I can point to. But one is we're just plain and simple, just using the English language, we're buying the blood. We're buying, there's OVV again, by the way. There's OVV right there, 159%. Remember I said more than doubled in just about 6 weeks or so? Well, there were others that did the same. Okay, let's look at Jailbreak. 88% with this strategy. This one hits a few more really monster home runs. Also has usually some stocks that give you some Malox moments. but boy, look at that, 200%, 200%, 110 right out of the gate there. This is our favorite search because it scares the daylights out of you. The stock prices are so low. That's what makes it so explosive. So some of you aren't built that way. I get that. Bleyer's Bottom Feeders is the next best. Okay, and here instead of dollar, you're usually dealing with $3, $6, $9 stocks. Somewhere in that neighborhood. If that's still a little crazy for you, you can do something like this one. S&P 500 stop ascending. Now you're dealing with S&P 500 caliber stocks, and you're buying Ford and MRO and all that. But again, once you start doing that, don't be surprised if your performance is not quite as good as you thought. So there's some other specialized searches in here. Like this one has been on fire over the past 5 or 6 turns. It is probably in maybe the top 10 list over the last 35 bottoms, but really, really doing well now, and that's Bottom Fishing and Rising Industries. This one stock really went bananas. Okay, but you can just get in here and you're probably thinking, listen, I could run the whole list. Okay, quick test, top 10, 8 out of 10 winners, market performance with blue chips, right? Quick test the top 10. 9 out of 10 winners, market performance with blue chips. Okay, that's what you're going to get. Bottoms up, you're going to get more. 98%, best yet. Why? This is where the blood was. These are the bloodier stocks. Pirates Long, probably somewhere in the middle. 62%, right in the middle. I knew that before I even ran the search, and not because I've done this 1,000 times. Look at the prices. 5, 6, 10, 56. Okay? That's what it tries to find. Russell 2000. Run that one. Quick test. 97%. You're like, okay, I get it. Well, what about now? Okay, well, let's run it March of this year. '15th would have been your date. Let's see. All right, got the right date there. What we need to do is get the right date here. Let's run it for a few days. 14% in 2 days. Pirates Long. Different stocks, right? 20%. This is the one that we used on our campaign. Okay. 19% in just 2 days. Remember, that's what we said? Jailbreak. 24%. We said, remember, we said that's the best one, but it also scares the tar out of you. Blyer's Bottom Feeders. 24% in 2 days. Okay? And listen, I've lived through this in real time. I've seen all of these searches at play the last 35 opportunities. And this is the real deal. You're never going to find anything else like this anywhere at any price. You're just not. So hopefully we're making a mark with you, because if we're not, something's wrong. I just told you, and people watched me do it live. I'm part of a live trading room. I pulled the trigger on that day with Pirates Long, and we were up 20% in 2 days. Okay? So what you need are powerful searches, because when you get it right, that same $20,000 in just 3 months could just about double on a really good bottom. And it can even get better than that. That's with no management, no money-making tactics that we're going to talk about here next. So that when we get it right, we can really hit some home runs here with these explosive stocks. Okay, so how could knowing precisely the right stocks to buy change things for you? Can the same thing be done with Canadian stocks? Yes, they can. And so we have some training specific to the Canadian market that you're going to learn a little bit more about towards the end of this webcast. Okay. Do those have stop criteria? No, that's not even with the stops yet, which actually makes it better, believe it or not. It can more than double some of those performances, actually. Isn't that cool? Everybody's afraid to say something, I guess. How could knowing what you've learned so far change things for you? Don't tell me it can't, because that would be a lie. All right, you want to be quiet. All right, I get it. Cool. 5 trading tactics that'll make you money. You're probably just still like, what in the heck? All right, I get that too. I mean, it's been a tough 9 months. But that opportunity that I just showed here, just recent, that was this year. It only took 2 days. You'd be done for the whole year. Why are these tactics important? Because risk comes from not knowing what you're doing. No plan, not an option. Emotional trading, we got to get out of that so that we're not just flushing money down the drain. So this is what we want to talk about. We're going to be talking about when you do something like this. These are some of the staples. There's always more to learn outside of this webcast, but generally speaking, you want to be 5 to 10 stocks. If it's the first opportunity for you, you want to be 10. I actually have really struggle telling people to go even towards 5, because as you saw, some stocks go up 300%, some go up 40, right? So the more opportunities you have for one of your stocks to go up 300%, the better. Now, having said that, more than 10 stocks is too many, because then you start getting too many of those 20 and 30 percenters in there, and it dilutes your returns. So really the sweet spot is right around 10, particularly when you're new and you don't have the ability to exercise some of your bottom fishing wisdom from past campaigns to cherry pick some of the very best. Okay, so 10 is where you want to be. Now, we also will say this: no matter what we do in VectorVest, whether it's a retirement situation or the most aggressive trade of trades, you never want to risk more than 1 to 2% of your total portfolio value in any single position. So we're going to show you a stop loss here in a minute, that with a 10 stock basket, just using the stop loss I'm going to talk about out of the box, your risk is in line. It's going to be 1.5%. Okay. And if you want to get it more towards 1, then just use 60 to 70% of your capital. Okay. Also, let's talk brass tacks. If you got a $10 million account, you don't need to go bottom fishing with $10 million. You can do just fine with $500,000 or $1 million. So let's not go out and buy $10 million worth of $3 stocks. We all understand that. But if you can turn $250,000 into $250,000 more in 2 days or 2 weeks, you know, that's worth doing, right? Don't buy more than 2 stocks per industry. We say this because even though we've seen that it can dilute some of the returns, it's just not worth the risk piling all of your stocks into petroleum, even though it's hot right now, right? Because when the wheels come off, you know, that's going to submarine every single stock that you're trading, and you don't know when the wheels are going to come off. And so no matter what you're doing, whether it's a long-term core portfolio or it's a bottom fishing days to weeks portfolio, you want to stay diversified. It just makes good sense. We also want to favor ratcheting or trailing stop losses, and ones that give these stocks some room to maneuver. Okay, and so we're going to talk about the one that we use, don't worry. And we're going to allow our portfolio to extinguish itself. This is an important one, okay? This is one that's often overlooked. It's got some bigger words in here, so we'll make sure you understand what we're saying. But allow your portfolio to extinguish itself by not replacing stocks that hit your stop loss once a confirmed up signal is achieved. It takes at least 2 weeks off a bottom to get a confirmed up signal in most instances. And usually it's several weeks off of a bottom, meaning more than a couple. Okay, and so these stocks run the hardest and the fastest early on, within the first couple of weeks. There is a deteriorating rate of return on these stocks after you get several weeks into a rally, enough so that you at that point are far better off in AMD, Google, Facebook, Taiwan Semi, you know, great stocks. Okay, I gotta stop using Facebook in that example these days, right? Microsoft, whatever, you know, insert great stock. Okay, Procter and Gamble, wherever you want, you know, whatever you want to put in there, but great stocks. You know, you're better off once the rally matures in those great stocks again. Why? You want to be greedy when markets are low. You want to be fearful when markets are higher. So instead of being fearful now, you're looking for an opportunity to go full on greed. Okay, just not quite yet. We just don't have that catalyst yet to give us enough of an explosive day to carry forward. So that's the one thing we hadn't talked about as much as maybe we should have, but I'm going to show you, we're going to learn more about that anyway. So here's what we're going to use, something called Profit Locker, and that's how good it can be. Just nailing trades for you. All right, so I'm going to get over here and do less of that shock and awe stuff and more of just training. So here in VectorVest, let me show you this. I'm going to go to backtester. So I said we can do better than some of those returns we were talking about. So Let's take Blyers off that March 25th, 2020 low. And if we've managed a full portfolio all the way up through June, this is now 453% with 92.59% winning trades. This is Jailbreak, over 90% winning trades, up nearly 300%. This is Bottom Fishing and Rising Industries, up 150. None of those are worth sneezing at, right? This is March 15th, 2022. This year, 32% in Jailbreak, 90% winners, 26% in Blyers, 90% winners, 17% in Bottom Fishing and Rising Industries. Okay, this is 128 of this year, January the 28th of this year, 7, 7, and 4. Little realism. All bottoms are not created equal. Right? Here's 11/2 of 2020. Jailbreak, 126%. So you're saying, well, this guy's just showing all this impressive stuff back there. This happens all the time. I don't have time to run through 36 bottoms. You can do that for yourself. It's in the product. If you don't believe me, go back and do the testing for yourself till your fingers bleed. And what you're going to find out is exactly everything that I told you in this webcast is true. Okay? The product's there. If you don't believe me, go check me out. If I'm lying, write me a hate letter. It's not going to happen. I've done this. Okay? Look at these numbers. Now, when we talk about Profit Locker, now the questions are going to be, well, why are you still sitting there? Well, listen, I don't have to be, number one. You got to do something. I really don't, okay? Let's see here. Let me go to this. And a lot of people in this room who know me know that that's true. Okay, so anyway, we use something called Profit Locker, okay? Now, these here, we're using a more elaborate set of tools called Profit Locker Pro. You have to pay extra for that. What if, instead of this, I knock this down to Profit Locker, oops, and just take our normal approach here. Oh, that's of this year. It's not going to change. It's not, well, boy, I tell you, 56% still did really well. I don't know if it changed. Let me go back to this one in 2020. That's where we meant to go. All right. We'll do edit it. We'll do right out of the box. Everybody who is a member of VectorVest gets Profit Locker, okay? And on prolific market bottoms with a catalyst, you want to go 115 on what you think might just be like these last few that I've been coaching people through this year. We never thought any of them were going to be, the stock market's going to higher highs. We thought, well, maybe we'll get a few days to a couple of weeks, of bounce. Under those conditions, you want to drop that target down to 50. Okay? But let's see. We were 289%. Let's see how we do with just this combination here. And now you get to see that sometimes you start out underwater, and that's what scares the tar out of people too. All right, it's not 288%, but it's 188%. Okay? So you can do it with any set of tools. You can do a trailing stop as long as it's loose and get away with it. It's not going to be as good as Profit Locker Pro, but it doesn't have to be. I mean, 100% returns in months can change your life, right? 60% returns in just a couple of weeks can change your life, right? Definitely can. Okay. All right, so let's get back over here. So that's what, I should maybe explain what Profit Locker is, since some people aren't as acutely aware. Oops, back tester. So I will do that. So this isn't going out to expiration, but let me do, oh, there we go. That's what I wanted to see. So this is what it looks like. So over here where my cursor is going in circles, that's where I want you to focus your eyes, okay? See this black line? That assumes linear stock price progression in a trade. That's an assumption, oops, that's an assumption that has to be made in order for you to produce the integrity of the parabola of our stop price, okay? In other words, that's the only way I can draw it out with any kind of visual clue as to how it works. So this red line is the stop loss. It starts out as what seems like an ordinary trailing stop till profitability is achieved. Then it broadens out to accommodate new volatility that may creep into that trade, to try to give it a wide berth to get closer to your target. As it gets closer to your target, this thing really begins to accelerate, almost like theta decay on an option. The closer you get to that expiration date, this booger's, or the closer you get to your target in this case, this booger's really moving fast. And the idea there is give your trades plenty of room early, particularly once you're profitable, and then really lock in aggressively near your target percentages, or beyond if they just keep screaming up the page. That's a 1% trailing stop at the end there, okay? The 100 is going to look the same. All it's going to, all it's going to do when I put the 100 in there is just look at this, look how broad that belly becomes now. Okay, so it just made it even broader. Okay. Deborah, I actually answered that question in the Jockey Club, but when you don't see bottom fishing searches off of a what you think is a market low continuing to climb day after day after day, it's not a bottom. Okay. All right, let's see. Let's get back over here. But I'm glad you were in there to see me do that. All right, so what we're talking about on the third situation here is moving to knowing precisely when to sell. So anytime one of your stocks after you own it either falls immediately 15%, or if it moves up at all, you're going to try to lock in higher prices in the future, and that stop loss will tell you when to get out of that sucker. And you only replace it if a confirmed up call has not been received yet. Once you get to the confirmed up, you want to start replacing it with great stocks. And you probably want to have cash on the side to have already bought a bunch of great stocks anyway. And you just keep adding to those great stocks. Okay? All right, good. All right, so I'm going to skip that question. On the last question, there's more questions being asked of me interimly between questions, planned questions in the webcast than when we want them. So I'm just going to go to the end here and we'll take a bunch of questions at the end. I figure this, you're here today because you want to take advantage of your opportunities. You want to be more confident in knowing that you're doing the right thing at the right time, and that ultimately your system is going to lead to success. And it's really as easy as 1, 2, 3. But what we got to do to make this a reality is we got to have precise entries. We got to move from ordinary stocks to the right stocks. So we've got to choose knowing when to sell to knowing not knowing when to sell to knowing precisely when to sell. And so now you have the choice. I have really taught you enough in this webcast to literally get you going. There's no doubt. That's one of the things I love about this webcast. You have literally learned a good chunk of what needs to be learned. But there are still more things to learn. And so the choice is now take what you've learned so far and go it alone, probably make a few mistakes, or get the guidance to avoid those mistakes by taking a 5-week course. So we've got, now look, this course is no longer do you have to wait the 5 weeks. It's literally all up on e-learning platform right now. So you could literally move through this course in 3 days if you've got the time to do it. Each one of the modules of which there's going to be 6, plus some mastery sessions that have been recorded, even for some of the international countries. So for Canada, for Europe, for Australia, just to name a quick few, right? All of that is currently archived, and you're going to have access to all of it. Okay, there's probably, if you watched every single thing that's up there, I don't know, I haven't timed it out, but there's probably more than 20 hours of education up on the site right now. Okay, there's 6 core modules, a mastery session for each one, along with additional masteries that we did here very recently, of which there were 3, along with international masteries for our international markets. All of it is there. All of it is there. It's not for everyone, but if you want to learn how to do it and do it right, Abe Lincoln said, if I had 6 hours to chop down a tree, I'd spend the first 4 hours sharpening my axe. So what that means is it relates to this current offer, is if you want to get this done right, you better sharpen your axe. You better be ready, because the lower this market goes, the better the opportunity is going to be. And there's going to be opportunities along the way. And if you want to make the most of them, if you want to be able to get 30% already this year, easy peasy lemon squeezy, not hard at all, as I've done, in real time, in real trades, with real executions through Ally, in front of people in a live trading room. If you want to be able to do that too, go to this course, because you would not be able to do that without going to this course. I feel pretty comfortable in saying that. There's people in this room right now who watched me do it who are still asking questions. Okay? Go to the course. 5 modules. First one is all about getting the mindset right. Second one, how to really spot these market bottoms with precision. We're going to cover patterns to look for. We're going to cover watermarks in terms of blast off day percentages. We're going to cover, should there be a catalyst? What have some of those catalysts been? Things to look for. Okay. Some of the very best searches. We're going to give you some of our favorites in Module 3 and show plenty of evidence as to why. In Module 4, we go deeper into those money-making tactics, and in Module 5, you leave with a final plan. So basically, that's a putting it all together presentation where we take everything that you've learned so far, wrap it up into a final plan. You could literally print the slide set out and use that as a checklist on your desk. 6 weeks, we'll show you exactly how to do it. I don't think it takes 6 weeks anymore, but if you want to go through it methodically, spend some time, think about it, reflect on it as you go, 6 weeks is about right. You can get through this thing in 2 days. I could get through it in a day, but I've been around VectorVest for 20 years. It's probably going to take a few days. I mean, at the minimum, okay, just to get through. $600. $600. I'm going to go ahead and put the link out into the chat. So if you're interested, I'm going to tell you, I've never had anyone. I've been teaching this course for 20 years. Okay? I have never had anyone ask for their money back. Anyone. Ever. I've actually never had anyone ask for their money back in any course I've ever taught. So I don't know. But $5.95. Cannot beat that. Listen, one of your stocks can pay for this course in the first hour of the first day. Of course, it depends on your account size. You get the point. This is ridiculous. $600. $600. All right, I'm going to put it out in the chat. www.vectorvest.com/bf. And what I'm going to do next is on YouTube. I want to make sure you guys are still streaming. Looks like you're good there. I can't see any chat on that side of the fence, but you guys know what to do. I put the link out into the GoToWebinar chat. You guys know how to use the browser. Otherwise, you wouldn't be on YouTube. Although with mobile phones these days, I guess I shouldn't say that. but you know what to do. You guys are technologically sound. Go to www.vectorvest.com/bf. Okay. Let me double check that. I meant to double check it before we started. But my guys are good. I'm in good hands around here. These guys are good, you know? $5.95. Normal price is $2,000. I've had people pay $2,000 for this course, by the way. More than should. So don't let that be you. $5.95. That's the lowest price you get. Doesn't matter whether you're elite or what have you. That is the price. That's the low price. There are no lower prices. There never will be. Dr. DeLito would call me the very next day and say, "What are you doing?" it's not happening. I'm surprised I don't get that phone call now, to be quite honest. Okay. Let's see. There's no further price reduction. That is the price. $5.95 for everyone. We want everybody to learn it, because here's why, guys. Here's why we're doing some of these crazy prices on this course right now. Because we know that if we train you guys, you go out on the next bottom and you make, let's go conservative, you make 18% in a few days. Okay? Do you think you're going to be a VectorVest subscriber for a little while? You bet. What if you made, I had a gal in the Jockey Club this year, when I made 18%, she was up 54. She's a VectorVest subscriber for life. She said she paid VectorVest for the rest of her life. See, I don't even care what the cost of the subscription is anymore. It doesn't matter. It's irrelevant. See what I mean? That's what we want. We want you guys to be able to thrive so that we thrive. This is a specialized thing. I can't teach it in a single setting. It just can't be done. But I can show you enough to get your feet wet, and you can. Some of you might be able to do okay with what you've already learned. But I'm gonna tell you, man. There's things that you're gonna have questions, you know, and all those questions are going to be answered in this course that's online. We feel very confident in that. If not, you can always shoot me an email, stevec@VectorVest. Okay, you can always shoot me an email. All right, so final questions here. How much for Jockey Club in addition? There you go, my man. So Jockey Club is awesome. So that's a full-blown trading room. You know, when bottom fishing opportunities come up, we definitely do it. But we also do a lot of swing trading. We have a short position going now. I think Patrick opened today. You know, we've got some long positions still going. One, I think, in petroleum in particular. You know, that kind of thing, right? So we're always doing something. We meet every day from 9 a.m. until 10:30 a.m. Eastern New York City time. So a half hour before the market opens up through the first hour. And that is essentially $2,000 a year, because you're going to have real time plus the Derby. And the Derby is, well, it's probably $2,200 or so a year. Because the Derby is another $99 a month, I think, at that point, or $129 a month, depending on your situation. But yeah, so it's worth it, you know, it's worth it. All right, guys, so let me see here. Any further questions? Does BSR and MTI tell us how far we are from the bottom? No, it just tells you that it's time to be searching or not, right? So they actually tell us a lot of things. When we say what are they telling us, we're talking particularly in this instance about bottoms, and all they tell us is to be on alert. They don't tell us when the bottom is here. They tell us when to start looking, and you can be looking. Look, the longest the buy to sell ratio, I think, so far has ever been below 0.2 consecutively is 42 days. The average, I think, is maybe at this point just north of 10 days on average. You know, so you're in a situation right now where you're already getting a pretty good head start on that high water mark of 42. So there's going to be something, you know, I think, in the not too distant future, in other words. So it's very helpful just giving you that kind of information alone, right? I mean, if we go beyond 42, that would be a new occurrence, and that one is like by far and away So if the longest ever is 42 and your average is 10, just imagine then, you know, kind of the aberration that 42 was. Okay. All right, good. So let's see here. All right, looks like we've, a lot of people said that they're going to be taking the course, which is awesome. I love that. And you got great instructors in that course. I think Jerry's in there as well, which is great. So I think it's me and Jerry, basically, if I can remember correctly. But anyway, guys, welcome aboard. I hope this is something that's going to work well for you. For those of you that don't want to take advantage of this opportunity, we'll see you in the future. I have no doubt about that. So, you know, just take VectorVest piece at a time. You know, let VectorVest pay for itself. And it will. Okay, it will. All right, we'll see you guys soon. I'm delighted to have spent some time with you, and we'll see you guys soon. Good luck out there. And hopefully we'll get a chance to go bottom fishing here again in the not too distant future. We'll see. All right, we'll see you guys soon. Got to go. Bye.